Okay, so I'm sharing my screen here, and this is our web scanner. This is the online version of it that we're talking about, the Harmonic scanner. And what this technique involves is using the 15-minute chart. So there's a button right here that says scan for the N15. That's the 15-minute charts. They're going to come up here. And when I do this technique, what I do is I just start at the top because that's the most recent one. That's EURNZD. So we open that up, and this is a 15-minute chart. So each one of these bars are 15 minutes. The blue color are bull candles that have closed above where they opened. The red ones are bear candles, which means they've closed below where they opened. Okay, so this is a butterfly pattern. There's different harmonic patterns that the scanner finds, and they're basically reversal patterns. So usually the currency has made a pretty strong move in one direction, and now we're looking for it to reverse and go the other way so that we can make some profit. So over here to the right, you see the entry area. You see a stop loss. So if you take the trade, that's where you put your stop loss to limit your risk. And then you see 3 take profit areas where you would take your profit. Now, I normally get out at take profit 1. Unless, of course, my entry is very close to that, then I will take it to take profit 2. So that's normally what I do. Sometimes you can also set a trailing stop and try to take it all the way to take profit 3 at times. So we're looking for the candle to go into the entry area, which is this green line right here. And as you can see on this chart here, none of the wicks of these candles go into the entry area, so we would not take this trade. We would simply move on to the next one. Okay, the next one is NZDCAD, and we see here at point D, we're looking at point D, that the wick of this red candle right here does touch the entry area and goes into it. However, it does close outside of the entry area. So that's where it closes, right about there. So what we would do is, since it closed outside of the entry area, we want to wait for the next candle to open, and we want to make sure the price is moving in the direction that we want it to go. We don't want it to keep moving this way because then we could lose money and get stopped out. So in this case here, I would look at this red candle and I would set a buy stop about 1/4 of the way up that candle. Okay, probably around this 92499 or 925 area. Okay, now since my stop loss is going to be set down here at 92382, that gives me a risk of about 12 pips. And since take profit 1 is at 92555, I'm only going to gain 5 pips there. So I'm going to let this run all the way to take profit 2, and I'm going to get about a, I think it's a 13 pip gain or something like that from 9250. So you see here, it does move up. I put a buy stop order in, so it waits for the price to reach that level before it executes. Okay, if it doesn't reach that level, it wouldn't execute. But as you see here on the next candle, it does hit that level. Price continues moving up all the way through 1, 2, and almost hits take profit 3. Okay, so this would be a very good trade. The next one is GBPAUD. You can see here that this in this trade here, this chart here, the candle does go through the entry area and it actually closes below the entry area. So since that candle closes below the entry area, I would simply put my buy stop order in right at the entry area, or maybe 1 pip above it, to make sure the price is moving in the direction I want it to move. You see that does happen here. I could get in right at the entry at 64357, 1.64357. I could get out at take profit 1 for a gain of about 28 pips. Okay, so I can get out there, or I could decide to stay in the trade, use a trailing stop, maybe take it up through take profit 2. It's totally up to you, but like I said, I usually get out at take profit 1 unless my entry is very close to that, or if take profit 1 is more than 50 pips away from my entry, I'll usually get out with a 50 pip gain. If I get a 50 pip gain, I'm usually going to get out of the trade. So let's go to the next example, which is AUDJPY. As you see here, this goes up into the entry area, but it closes down below it. So again, this candle here is the one that goes up into the entry area. I would look about 1/4 of the way down that candle, and I would set a sell stop order right about there at 86.07287. You can see that over in the right hand column highlighted with black around it. So that's where I would set my sell stop order, and then again I would probably more than likely get out at take profit 1 for a good gain there. Okay. The next example is GBP CAD, and as you see here, this one does not hit the entry area. So even though we could have made money with this trade, as you see it moves up, we would not have gotten in it because using this technique that we're using, we need to wait for the price to go into the entry area, and then we need to wait for that candle to close, and then we take the trade on the next candle. So since it didn't go into the entry area, we wouldn't take that trade. Okay, this is USD CAD, the next one. And this one's a little bit harder to see. It's a little bit smaller. But it does hit the entry area way up here. It does hit the entry area. It closes. It appears to close outside of the entry area. So again, I would go about 1/4 of the way down the body of that candle that hit the entry area, and I would set a sell stop order there, and you can see that this goes way down and goes all the way through take profit 1, take profit 2, and take profit 3. Okay, let's do one more good one here. You see AUD USD. This one comes down. It looks like it touches the entry area right there. So again, we would set a buy stop order about 1/4 of the way up that red candle. It looks like we would probably get in on the next candle, and then it does drop down. But you see here, it only drops down to the entry area again. It doesn't drop all the way down to here and stop us out. And then it moves up, drops down again, then it moves up, and we would obviously get out here at take profit 1 before it does drop down again, and then moves up all through all 3 of the take profit areas. So this is the way that we're using the Harmonic scanner to earn profit trading in the Forex market. And as you can see by these examples I just showed you, we use the 15-minute charts, and the win ratio is very, very high, guys. Very, very high.